Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time on this Friday.
Good afternoon.
Well, the American stock market was closed on Thursday for Thanksgiving, of course, but in Europe there continued to be this anticipation for the Federal Reserve to back off on interest rates. That led stocks higher. In Germany, the DAX up almost 0.8%, the CAC 40 in France up 0.4%. What's the story in the global equity markets?
Yes. If you look at the European equity market, it extended gains for the third session on Thursday, with the stock 600 closing above 440, which is the highest level in the past 3.5 months or so, mostly led by the gains in chemical stocks. Meanwhile, if investors are looking for a possibility of slowing down of interest rate hike, they're still a bit cautious in a sense because the ECB have said that they will slow down. They will not slow down unless the inflation numbers are coming down aggressively. Without that, it's going to be quite of a problem for the policies to be eased. But if you look at the Fed, they have said that they will lower the speed of the rise, but they will still nevertheless raise interest rate. We're probably expecting somewhere around 50 basis point hike in December. After that, probably the raising interest rate might be slowing down quite significantly. A lot of people are quite confused for the time being. As you know, the Asian markets are kind of muted in terms of the trend. The main reason for that is obviously because of that uncertainty about economic slowdown, also the monetary policies. But if you think about 2009, the economic growth rate slowing down to the lowest level. If you look at the equity market, it actually bottomed at, as for the Asian market, in October and November of 2008, and for U.S. market, it bottomed in March of 2009. So if we think about the economic growth rate slowing down, but nevertheless the year after might recover, then we think that this is the right time for purchasing equities for the time being. So the volatility might remain for the short term, but we think that the market can rise further in a longer term basis.
Makes sense. And here in Korea today, you mentioned the trade being somewhat muted. The KOSPI closed a little lower. Decline was bigger on the KOSDAQ. Only a few exceptions among the big names like battery-related companies and steelmaker POSCO. The exchange rate coming down a little more. Tell us about the domestic market.
Yes, if you look at the KOSPI, it's up, it's down by 0.14%. KOSDAQ is down by 0.63%. Extended again at the beginning, but declined quite sharply and then recovered somewhat, but nevertheless closed pretty much on a weak side. If you look at the foreign investors' investment, they net bought about 50 billion won of KOSPI. They sold about 30 billion won of KOSDAQ, so the amount really isn't much. And also the futures market, though, they were a major net seller of the futures by about 417 billion. If you look at the local investors, the retailers are net seller of KOSPI, net buyer of KOSDAQ, and also futures market. Institutional investors were net buyer of all three markets. In terms of the Korean won, it continues to appreciate. It's hitting at 1324.5, declining further by 6.5. It did go up to 1350 and then coming down. So after a very sharp move from the 1440 all the way down to 1310, now the volatility is remaining. If that's the case, we think that, though, the currency is not going to be the major implication for overall market trend. In terms of where the rises are happening, as you said, the battery industry as well as the steel industries, construction equipment, construction-related materials all showed quite significant rise. It seems that the market is trying to figure out how the economy might do next year. If you think about global economic growth rate at 1.2%, Korea coming up at around 1.9%, it will be relatively good. So therefore, we think that foreign investors' interest for Korea should remain quite strong.
Well, if we could talk about oil for a minute, growth, especially China, is a major concern right now, and oil prices are down solidly below $80 a barrel now. There had been also talk of a cut in production. Not clear where that stands. Gold also has seen a fairly significant rise so far this month. What do you see happening with oil and gold?
Yes, in terms of the oil prices, in the past it got heavily affected by the U.S. dollar. When U.S. dollar strengthened, oil price falls. U.S. dollar weakens, the oil prices rise. But for the time being, it seems that the dollar rate is going down to about 106, while the oil price is falling to around $77 per barrel for WTI. Clearly, this is because of the slowing economic growth rate, affects negatively on the demand side. As you said, the Chinese demand is expected to weaken as China is the number one oil importer of the world. So therefore, any weakness or any slowdown in domestic consumption could cause that uncertainties. Also, China is heavily focused on using the natural gas from Russia, as well as the alternative energy, including the solar panels. So we think that the structure of the energy sources are changing for China. That affects negatively in terms of oil prices. Also, gold seems to be quite steady, with the dollar being quite steady. We think that the gold and silver and the crypto, which are called alternative assets, we think that the price decline is already finished, while it might be showing somewhat of a rising trend due to the stabilization of interest rate as well as the uncertainty on the economic growth rate. All being said, we think that the WTI might not rise further from the current level. We think that the range bound should be somewhere between $75 to about $85 per barrel over the next 6 months or so.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on the program, and have a great weekend.
You too. Thank you.